Good morning and welcome to Charting the Markets on Thursday, the 14th of December 2023. Yesterday evening, the FOMC meeting, the Federal Open Market Committee, basically stated that the US Central Bank will be cutting its rate 3 times next year. And this brought forward rate cut expectations from May of next year to March with regards to market participants. And they also believe now that the US Central Bank will cut rates in total by about 150 basis points during next year, all of which has been extremely positive for equities, which continue their late October rally. And as we can see here, even the FTSE 100 has now joined the fray. As you can see here, we are heading up very, very sharply, which we don't usually tend to do on the FTSE 100, and are heading towards the highest seen back in September at 7,747 on this daily financial bet. Now, from a technical perspective, we have entered this resistance area going back to July of this year. So it may be the case today that we could basically stall in that area short term. But if the October to December rally were to continue, as it usually tends to do during the seasonal last 2 weeks of December, also called the Santa rally, we may actually continue our ascent towards the April high at 7,938. But I would be surprised, to be honest, if we were to reach it with regards to the FTSE 100. But the trend is your friend, that's pointing higher. We've also now broken through this September to December downtrend line, all of which is very, very positive with regards to the ascent of the FTSE 100. And the story is quite similar in Europe. If we for once look at the CAC 40, the French stock index instead of the German one, you can see here that we've now risen above our April high at 7,759. And if I zoom out onto the weekly chart, we are now trading in all-time record highs. If I zoom out even further, on the monthly chart, you can see this very clearly here. This is the 2008 bear market. Then that is the 2020 COVID bear market, and then we've had also the correction last year, which has also now basically all been reverted, and we do continue on this strong upward trend that we can see here. And if we go back to the weekly chart, we can see that we are currently on track for our 7th consecutive week of gains on the CAC 40. And the last time this happened was back in October of 2022. As you can see here, there we had actually, I think, 9 consecutive weeks of gains taking us to those highs. So all looking very positive. And if we go and look at the Dow Jones Industrial Average, you can see here on the weekly chart again, we are also trading in new all-time record highs. So really, really strong markets being seen here. Investors piling in to equity markets on that news that the Federal Open Market Committee is actually now dovish, that we've hit the top in our rate hike cycle and that rate cuts are priced in for next year. So with regards to the Dow Jones Industrial Average, we're now heading towards the psychological 38,000 mark. If I go back to the daily chart, as you can see here, we've had these very sharp ascents, then a few days of consolidation, another sharp ascent, consolidation, and then just recently at the beginning of December, consolidation. And now you can see here really, really strong acceleration to the upside, taking us towards 37,500. Now, with regards to support, well, you have to go back to the previous all-time record high, and that was made back in January of 2022 at 36,955 on this daily financial bet. So that is your next support level below the psychological 37,000 mark. But as we can see here very clearly, we are heading higher with regards to the Dow Jones Industrial Average, trading in all-time record highs. The Nasdaq's not far behind. If you look at the Nasdaq chart, let me just put it up because it seemed to have slipped away here. We can see that here also we are surging higher, and we are now trading at levels last seen back in January of 2022 and are very fast approaching and testing at the moment actually the December 2021 high, and are also approaching our record all-time high, which was made at 16,769 back in November of 2021. So here, as we can see here on the weekly chart as well, we are clearly going to have a 7th consecutive week of gains with regards to the Nasdaq. And right now there seems to be nothing which can slow down this ascent. The US dollar has taken a hit yesterday and dropped to a 4-month low with regards to the US dollar index, as the Fed basically said that it had changed its stance to a dovish one and priced in 3 rate cuts for 2024. And on that news, US yields came off, but also the US dollar. And we can see the inverse of this happening on the euro dollar chart. And as you can see here, the euro dollar surged higher and has now risen above the red line here, the 200-day simply moving average at 108.29, and is heading back up again towards the psychological 110 area, where we basically faltered back at the end of November. Now, on the way higher, we also have a potential short-term resistance at the end of August high at 109.45. So just bear that in mind. And then we also have the 21st of November high here at 109.65. So a little resistance on the way up between 109.45 and 65 on this daily financial bid before we can attempt to reach this psychological 110 mark. But you can clearly see here that the ascent we've seen since October of this year seems to have resumed. We are now trading back above the 200-day simple moving average, and basically as long as we stay above last week's low at 107.24, the uptrend is very much intact. And if we look at the Australian dollar, what is interesting here is that the Australian dollar is also heading higher, and again on the back of the weaker greenback, has now risen to levels last traded in August of this year. So we are now trading in 5 months highs here, and approaching the psychological 68 mark, above which, if I can just reduce this here, we can see the 27th of July high at 68.21. So that's the next upside target ahead of the July peak at 68.94. But again, you can see here very clearly a series of higher highs and higher lows, and which is the definition of an uptrend. An acceleration to the upside. Yesterday's candle basically more or less engulfing the last 4 to 5 trading days and ending very bullish, and us trading above the 200-day simply moving average here at 65.77, all of which is bullish for the Australian dollar against the US dollar. And if we look at Japan, the Bank of Japan last week, or its governor Kazuo Ueda, basically hinted at tightening the, removing the ultra-loose monetary policy that the Bank of Japan has been pursuing for several decades now. And basically that led to a sharp sell-off, as you can see there, taking us briefly to the 200-day simply moving average last week, which acted as support, and then we bounced back towards the 146 yen mark. But yesterday, with regards to the US Fed, basically talking about rate cuts next year, the US dollar took another hit and took us down to a new low, which is again a 5-month low, going back to August and July of this year to 140.95. That level is likely to be taken out in the days ahead. The next downside target is the 140 area. And then below there, we've got, as you can see here, the mid to late July lows at 138.07 and 137.25, which are our next potential downside targets for dollar yen. But again, you can see a series of lower highs, lower lows. It's a very clearly defined downtrend, which is now accelerating to the downside. And basically, as long as we stay below this downtrend going back to November of this year, which currently can be seen around 146.30, we remain bearish. The weaker US dollar has helped commodities such as gold rally again, and you can see that here on the spot gold price, which yesterday had a nice surge higher. You can see here we recovered from our $1,974 per troy ounce low we made just yesterday. It's just slightly above the 55 and 200-day simply moving averages here in orange and red at $1,963 to $1,955 per troy ounce, and basically have now risen to this previous October to December uptrend line, which now, because of inverse polarity, is acting as a resistance line. As you can see here, it did so yesterday and is doing so again today. So it wouldn't surprise me if we were to stall around the $2,035 mark or so today. If we were to continue to rise with regards to the gold price on that weaker US dollar, we may actually retest the $2,050 mark. And then above there, we've got some really important resistance going back to the highs seen in 2020, 2022, and also in March of 2023, which came in between $2,070 and $2,082. So that's the next big resistance area which the gold price might be aiming for, provided it does stay above this week's low at $1,974. Now, if a short-term retracement were to be seen, though, we've got some really solid support now coming in between the $2,009 high here, the 30th of October high, to $2,007 high from the 24th of November high, and also we actually have the $2,010 here, the 5th of December low, all of which gives us a pretty good support area going forward. The silver price is also looking kind of interesting in that we have basically bounced off a support line here yesterday at $22.51 per troy ounce, and have now risen above the 200-day simply moving average at $23.55, which is pretty positive. And the fact that we've also managed to take out the September and October highs between $23.70 and $77 is encouraging for the bulls. So the next upside target really, the upside target we had in play were the mid-November highs at $24.15, which we're currently testing at the moment, which caps at the moment short term. But then the next higher high is basically the one seen in August of this year, $25.01. And it's also a round number, so psychological support, resistance that the silver price might be aiming for in the days and weeks ahead. So again, from a technical perspective, provided we stay above the last reaction low, that's to say a low which is lower on this daily candlestick chart than the one to its left and to its right, that is to say yesterday's low at $22.51. As long as that holds, further upside is in store for the silver price as well. And last but not least, I'd like to talk about US natural gas, because you may remember that at the beginning of November, we are talking about it potentially topping out. And this is exactly what has happened since we've had this really, really clearly defined downtrend channel take us through the red line here, the 200-day simply moving average at $2.70. And since then, we have now fallen all the way to $2.21, which is a level last traded in June of this year. So we're trading in 6 to 7 months lows here, as you can see. And if we were to fall through $2.21, then we've got a support area coming in between the April and also the June lows of this year, between $2.16 roughly and $2.06. So basically further downside likely in store for US natural gas prices. Now resistance can be seen along the upper end of this downward trending channel, and also the price gap we had earlier this week with last week's close on Friday. And this price gap can be seen between $2.44 and $2.58. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is @AxelR_IG.